Shekhar Ramamurthy, who's MD United Breweries, joins in to talk about how the business for premium liquor is shaping up right now and what are the strategies that they have in place to exploit their increasing market share. Shekhar, good to have you on the show. Thanks very much for taking out the time. You're a strong, dominant player in the beer industry. How much do you think have you been, been able to monetize or capitalize on the kind of growth momentum the industry has seen per se over the course of the last 12 months?
Good morning. Well, the beer industry has seen growth, as you have seen it, about 10% over the last year or so. Part of the reason was that last year the competitors were weaker because there was a highway ban. We have clearly done a little bit better than the market. And specifically to your question, how we have been able to monetize and take advantage of it, is that, the answer to that is that our strategy has been to be a player and try and be a leader in every geography and in every consumer segment. Now, as the Indian economy develops, across categories, across consumer categories, there is a greater stratification of price points and choice sets. So beer too, there is a top-end, urban, affluent consumer who seeks variety, who seeks special flavors, special offerings, and we play there. We have Heineken, we have Ultra, and a notch below that there is what we call accessible premium, where we have launched premium strong beer brands like Amstel, Kingfisher Storm. And of course, India is still largely what we like to call in the beer industry a mass premium market. That's where Kingfisher Strong play, and the kind of economic demography that India has, that will still be the largest a consumer segment and largest volume base of the industry for quite some time to come. So in brief, our strategy is to be a player in every segment. We know that there is this variety and craft beers coming in. We intend to play in that soon, early next year. And we have recently also entered the non-alcoholic space with the launch of Kingfisher Radler in Gujarat and Karnataka as a test market. And the initial response is very positive.
Current market share in key categories, and do you think that you will be able to gain more market share irrespective of the industry growth?
Well, Nikunj, the two are a little different. Industry growth depends on a whole host of things like pricing basis, the government excise duties, access, overall economic development, and we are quite hopeful that the industry will grow, high single digits over the next couple of years. Now, as far as market share is concerned, as you know, we already have a 50+ market share. And when you have 50+ market share, adding additional share is that much more difficult. But our intent is clearly to add share. And for that, we have a portfolio now. And, linking up with what I said a little earlier, as markets develop, as consumer segments develop, it's very important for all players, and particularly market leaders, to have a repertoire of brands. So it's no longer sufficient for a company or a brand to be present only in one segment. And that's true for all categories and not just for beer. You see that, when people used to go out to eat, previously they would stick to 1 or 2 restaurants. Today everybody has a repertoire of 4 or 5 restaurants. Same way in beer too. Consumers seek a repertoire, and our intent is to play in that repertoire, which is where you're seeing a lot of emphasis by us on Heineken, Ultra, Ultra Max, launch of Amstel, launch of Kingfisher Storm, launch of our non-alcoholic beer category. We will be introducing our own craft variety beers early next year. So yes, we intend to add share, but we are also mindful that adding share is always more difficult when you already have more than 50% market share. But clearly that's our objective.
Look at the Indian beer industry. There there have been emergence of lot of boutique brands, and Bira I think is a classic example. The brand did not exist 10 years ago. Now at least in metros it's a brand which has a decent amount of recall. Yeah. I always thought that the liquor industry had a natural moat around itself and it would be difficult for boutique brands or new brands to kick in. What is your take on some of these new brands which have got created, and can they sabotage your growth? Can they sabotage your market share?
First, to the first part of your question, I would say this is a reflection of the maturity of the Indian consumer now. And the urban affluent consumer in India today behaves the same way as, let's say, an urban middle class consumer would behave in a developed economy. So where you exercise choice, you want variety, you want to express yourself, and consuming a different kind of beer which didn't exist before with a different flavor, it's a way of expressing yourself. So the way we see it as established players, if I may, is that it's good for the market, because if new people come in and create a new consumer set, create more excitement, it's only good for the industry. For us, the way we see it is that the urban affluent consumer is a niche consumer in terms of numbers in the country, in terms of volumes. However, that urban affluent consumer is very important because they typically tend to have a disproportionate share of voice. So to us, that segment is important, which is why Heineken and Ultra, which is why our intent to play in that same segment which Bira and a few other brands have come in, albeit with a brand of our portfolio, but which will offer differentiation in taste. So yes, it was not there before. We see it as a reflection of the growth and maturity, increasing maturity of the market, and it can only be good for the industry.
Right. Shekhar, correct me if I'm wrong, but you have about 20-25% market share in premium and super premium segments. You're saying that you're seeking leadership there. By when, by how much do you plan to increase this market share?
Oh well, the 20-25% is speculative. We believe we have a higher share there, but with the kind of portfolio we have today and the way we see our portfolio evolving over the next 12 months, we think in the next 24 months we will have 50% share even in that category.
Also wanted to understand, Shekhar, because you've been earlier flagging off a problem in the West Bengal market, and you've been saying that it's a problematic market for some time to come. Are things sorted now, or do you sense that hike in duties has usually had an immediate impact on sales? Do you think this is an issue which would subside, or is it going to badly hit you?
Well, right now West Bengal is one sore point for the industry. Ever since the duties went up January of this year, the industry has declined by almost 50%, and we see no respite from that. Of course, in terms of numbers, once we go into March next year, the decline will not be 45% because the base would have been lower, but it will be a long haul. The West Bengal consumer has not taken kindly to prices having gone up 30-40% in one shot. We see a lot of consumers moving to hard liquor. So it is a long haul in West Bengal for us as the beer industry.
Okay. So closing comments, sugar prices, or in this case molasses prices, have come down. Commodity prices in general have been under control. Can I safely say that at a margin level there is nothing to worry, at least for next 2 quarters?
No, Nikuj. The beer industry doesn't depend on molasses. That's the hard liquor, spirits, or IMFL industry as we call it in India. Our base raw material is barley, and barley prices have gone up, and there is a barley shortage. In fact, as we speak, we are in the process of importing a fairly large quantity of barley. So the other significant cost increase has been in energy, and which has resulted in over a 10-15% increase in glass prices. So for the beer industry, the margins are going to be under pressure because barley prices are up, barley shortage is very clearly evident to us, and glass prices have gone up. Sugar is a very, very small component in our raw material base.
We are looking this year in terms of demand trend, because as we speak, we are approaching towards the year end. How is this year December different from last year's December?
Well, this year December is so far looking good, but like I said, still the comparatives were weak. You would recall that last year in December there was turmoil in the Maharashtra industry. There was lack of clarity in to what extent the duty hike was going to take place. So Maharashtra industry was subdued November, December last year. So there's going to be about 10% growth in the industry this December too.
All right, appreciate your time. Wish you a happy new year well in advance, and certainly hope to see much more of you going forward.
Thank you so much, and the same to you.